Good evening. Today is the 4th of December 2019. We approach the midweek pip talk and we have a look very simply at what the market holds. But before we get into that, if you are watching the video on YouTube, be sure to hit the subscribe button and the bell for notifications. Each time we post a video, there are new setups, and setups equals money. So be sure to hit the bell for notifications. And if you haven't already, log on to litcapital.co.uk. Check out the website, register for free to get access to our online education academy. The Education Academy will give you a beginner's guide to Forex with a range of tutorials to help you get started, but more importantly, give you the information that's needed to make the step forward in starting your journey trading. Now, moving forward, what we are going to have a look at today is the dollar index, very simply because the dollar does have a NFP release on Friday. Now, this will be the last Friday. This will be the last NFP of the year, which does mean for any trader who is looking to really tackle the markets prior to NFP being released, now will be the time to really find a setup to execute, of course, on Friday. We've seen many NFPs of late have been very flat. So let's not, get our hopes up. At the same time, let's look at potential possibilities. We had the Canadian interest rate released today. It remained the same. We also had the Australian interest rate on Tuesday, and that also remained the same. So not much movement there. In regards to the dollar, of course, they have many. The dollar has a lot of conflict with China at the moment with the trade war. When it seems like the trade war is coming to some type of agreement, markets tend to pick up, and when the uncertainty comes back in, the markets drop back down. So really the dollar's taken a massive hit of recent in terms of strength, but the stocks have really taken up. There's been quite optimistic in the stock market, so we've seen that surge, but the actual dollar currency strength, as we can see, is looking like a bearish formation. So we'll keep our eyes out on this to see what's going to happen. Personally, we can see an equal high and an equal low. I do believe more areas of liquidity probably need to be created before we can see a clearer picture. So we'll keep you guys updated with that. Euro NZD, very simply with this pair, it is now within our discounted zone. However, I would like price to come down a bit lower into the kill zone between 62 to 88%. And very simply, I'd be looking for a mitigation play. Now, you can see that there's imbalances on the left-hand side, but beyond there being imbalance, there's also a mitigation that I would like the market in particular to come down and play off of. So we're going to keep our eyes open for Euro NZD. We're going to wait to see signs of weakness before we look at trying to go against the market direction. At the moment, we can see it's heavily bearish. So let's see a real strong indication that can allow us to push forward buying the Euro NZD. Euro USD, again, this correlates to the DXY. We've seen the DXY take quite a hammering. It is now looking like it's within a bearish formation. So when it comes to Euro USD, what we are wanting to see is very simply signs of strength, areas of liquidity that the market has tackled, and now signs of strength as opposed to where we can actually tackle this pair. Now, with that being said, I sent this out a few days ago in our channel. This was the direction that I was predicting the market to go, and as we can see, the market has come up. Okay, it's come back up to this area. It's cleared the liquidity. It's created another equal high, and potentially now from a daily perspective, we may be able to see now a bearish reversal candle formation. But of course, we are wanting to sit tight and really have a look at what the rest of the day is going to take, what the rest of the day is going to unfold, because ultimately we will be looking to short this pair and ride it down. With that being said, we have a look at oil. Now, oil has been a really interesting pair to monitor. Okay, what we have seen with oil, very simply, is a nice bullish formation. Okay, the bullish formation has really created nice 60% pullback entries for people to really be able to go long. Now, we're looking to have an institutional play off of our yellow zone. The blue zone above is just an imbalance. But what we are looking at is 50% of the institutional candle. We're looking to tackle that and make an entry off of that. So we'll have a 50 pip stop loss. It will be quite tight, okay? But as we can see, the downside potential will work in our favor. So we are going to sit tight with this one. We're going to see how the day pans out. And, you know, if we do get higher prices pushing up, great. What we want to see right now is for price to come up a lot higher. Like I said, you know, the dollar's taken quite a battering, and in doing so, oil has actually risen. So we do want to see what's going to happen tomorrow. Okay, we want to see if the dollar becomes stronger, and of course, if oil becomes weaker, vice versa. But ultimately, I am waiting for oil to come a bit higher. Again, it is now just about to touch my discounted zone. So I would like for it to come up a bit higher before I look at potentially shorting this pair, because ultimately I do know there is imbalance, which I've highlighted in the blue, which it could fill. So yeah, so we're going to sit tight with this, but more importantly, guys, copy the setup so that you can put yourself in a position to also monitor and set your own alerts. See what happens. And more importantly, guys, be at the front of moves. You know, if you're able to watch a pair, just one pair for the week, I definitely would suggest you watching oil or any commodity for that reason. That right now economies are very unstable, very unpredictable, which does offer a lot of strength to commodities. Euro AUD, another pair. We are looking for the discounted zone to be mitigated out of. I've got an institutional play down here on a smaller time frame, but what I can see and what I hope you guys can see as well is we've seen price really struggle to break this high here. It's created a nice equal high, okay, and price has slowly started to slow down, hence why we're seeing longer wicks, and now price is coming down. If I go onto the weekly, we can see from a weekly perspective that the market has really been ranging. It's still moving upwards, but it's still been ranging. So what I would like to see now is for price to come down into my kill zone area before I look to go long on this pair. Notice that I'm not looking to catch the sell, because I personally believe the sell has already been executed. You know, if you're not catching the sell at the right moments, then wait. Let the move play out and catch the next move. That may mean you have to wait a few days, and if that's the case, so be it. So yeah, that's Euro AUD. Gold, very interestingly, I again put this into our group chat. I've kept people up to date. I did say prior to this candle being formed, these last two candles being formed, that this equal high would most likely be taken out for liquidity to be grabbed. And now, again, we also want to see a bearish formation. I'm actually quite bearish on the thought, okay, just the thought of gold coming down to full imbalance before it looking to go up. So gold could really come back down towards 1410 prior to the year closing, maybe not. But what I would like to really see is for price to really come down and mitigate out of a lot of areas that's left before it does look to go up. But with that being said, in order for me to sell this, I would like to see gold push up into my discounted zone above 62 or around 62%. Look, sometimes it may only hit 50% and go the other way. So that's when you've got to make the decision where if 50% or 62% will be a better area for you to execute. But ultimately, I'd like to see this push a tiny bit higher in order for me to really feel confident to say to you guys, let's take this trade and ride this one down. And this really agrees with my setup that I have with silver. If we look at silver on a bigger picture, we can really see that there is even a somewhat of a head and shoulders formation to possibly be formed. But you know, taking any type of formation out of the equation, price action is showing us right now that we're in a bearish formation, okay, and that quite simply we are looking to accumulate, if not reaccumulate. So I would like price to come down into this zone again, my kill zone between 62 and 88%. And all that will do for me is allow myself to have a stronger confirmation and another added confluence to place in a trade, providing I can find a candle that the current market will be playing off of. Just because price comes into a discounted zone doesn't mean it's going to turn around. We have to find candles which the market potentially is coming back down to mitigate out of. And I would like the mitigation area to be around my 79%. So let's see what happens. I'll keep you guys updated. Don't forget, if you haven't already subscribed, hit the subscribe and the notifications to keep up to date with all of our trades. Join our free Telegram. It's on our website. Join the free Telegram. And remember, guys, every day is money day.